Welcome back. Let's get into the market movement then and see how things are faring on this front. Well, it seems that the rally continues. It's one of the best weeks for these Asian counters this year. As they certainly have enjoyed a much better improvement in market flow. 1.6% higher for the Hang Seng at close of trade, and a general green tinge across the board on that front. A whole host of company news perhaps is what markets were looking for. That was not to be. But the general sentiment of opening up economies has certainly helped quite a bit, and that rally continues to flow through then across most of the markets. So those markets sitting in some green territory. It's much of the same as well out in Europe. 1.5% higher for the DAX out in Germany. The FTSE 100 in London also more than 1% higher, while it's 1.8% up for the CAC 40, which is out in France as well. So a good day on those markets. Locally as well, more than 1% higher for the JSE All Share. Seems to be climbing back steadily now, and hopefully very soon we'll get to those pre-coronavirus levels. More than 1%, as I said, 53,773 points for the JSE All Share. The biggest gainers today seem to be those financial counters led by the banking stocks, which fell off quite considerably as well yesterday, so perhaps clawing back some of that lost traction yesterday. The gold indices seemingly not doing too much though, while the resources overall are 1.4% higher as well. So a good day overall on the local market. If you check in on the commodities, that oil price continues to climb more than 3% higher at this stage. It's at $41.24 a barrel. Many questions being asked really around the meeting between OPEC and its allies, so OPEC Plus, and where exactly the oil price would go from here. Supply issues may continue to rear their head, but for now, it seems that more demand is playing into the market, so you're seeing the price go a little bit higher. On the local front, when it comes to the currency then, still a better currency than we have seen for quite some time. 16 Rand and 88 cents for a US dollar. This is better than even the week before. Moody's downgraded us to non-investment grade, and which is obviously the week before. We also got the lockdown coming into effect. So South Africa's currency doing fairly well on that front. Hopefully we can get back to levels just before all of the madness at around 15 Rand odd against the US dollar. For a euro, it's 19.13 and 21.33 then for a British pound. Warwick Lucas joins us on the line now. He's from Galileo Capital, and he gets to chat to us about this market movement as he usually does on a Friday. Warwick, it certainly hasn't been the easiest time, but it's been a real rampage, if you want to call it that. Markets just keep on going higher. Where's this energy coming from?
Good afternoon, Arabile. Yes, certainly they have been going a lot higher. No question that the ongoing easy monetary and fiscal policies of central banks is helping to propel things higher. I think it's also pertinent to point out that with these lower rates, supposedly the long-term profits of companies are worth more in theory, and that's also leading to higher values. Of course, those are based on what are the future profits going to look like, and that of course is a potentially nebulous idea. I mean, we really don't know what the economic recovery path really looks like at this stage.
Yeah, so I suppose jumping ahead of themselves somewhat then on that front. The central banks, though, have really pumped a lot into global economies. Can we actually say that perhaps the market was saved by the central banks this time around?
Well, I think the focus of the central banks is really more on what they can do for the real economy, and really markets were just a means to an end. I don't think central banks are as focused on saving markets as they are economies, really. So, for example, if we look at the expanded Fed mandate for its quantitative easing, they used to in the past only participate in government bond markets, and that got extended to all kinds of credit, corporate debentures, various corporate debts and so on. So it was a vastly expanded pool of instruments that the Fed could buy into, and obviously once they buy into those, then the holder on the other side is sitting with cash, and where does that go? And inevitably a whole lot of it is going to find its way into the stock market too. So it's a very blunt instrument.
Yeah, so no cut in interest rates from the Fed next week as they engage in their meeting?
Okay, so that basically would entail, will the Fed go into negative interest rates? Well, I don't think so. It's always been a bit of a tricky area. I'm not sure that the negative interest rate experiment has really worked that well in the past. It has all kinds of unintended consequences. I guess we'll see.
Yeah, we certainly will. That oil price, though, hey, Warwick, $41.25 a barrel. It just keeps on rising on demand. But OPEC Plus can't seem to agree for too long on whether those production cuts are going to stay in place.
Absolutely. I mean, at this stage, the intention was production cuts up until the end of July. And while Russia and the Saudis appear to have an agreement on principle, they have a very big problem with non-compliance by the likes of Angola, Nigeria, Iraq, and so on, countries that probably have more fragile finances and really have to pump to balance their books. So they may very well, for their part, back out of further restraint if these countries don't come back to the party. I mean, at one stage, the fall in demand from the total market last month in April was down at about 28 million barrels per day. That's somewhat improved to around about 21 million barrels per day at the moment. But whether that will persist in the following months will remain to be seen. So it's a very delicate balancing act at the moment. And I think certainly these cuts in production are massive.
Yeah, how low can the rand go, though? I mean, we just keep on willing it on, but obviously it's going to need some fundamentals as well.
Well, yeah, I mean, it obviously requires a restoration of production and exports in the economy, and that's a hugely open-ended exercise. I mean, it depends on recovery in the economies of our trading partners. Do we have further second-round waves of COVID, et cetera, et cetera? So extremely open-ended there. I mean, it does provide a substantial shock absorber for the economy, but what we can certainly say is that the rand, or I should say South Africa, is effectively still on real interest rates, and that is providing some support for the rand. I think we must obviously also point towards the dollar itself as being weak because it's weak against other currencies as well. So let's not look at the rand in isolation.
Yeah, certainly true, though, as you said, then most markets also gaining. The Philippines market, the PSI, has actually been one of the big gainers as well in the past week, 11.6%. So the emerging market space certainly helping there as well. Anything big you're looking out for when it comes to the equities very quickly?
I think at the moment, the main thing that we're looking for are strong balance sheets and low debts. So basically, companies that keep it tight.
Yeah. Going to get very interesting in the coming week then as well. We'll see how things fare. Warwick, always great chatting to you on a Friday. All the best. Stay safe. Warwick Lucas there from Galileo Capital joining us as we unpack that market movement. That brings to an end my segment here on Point. Then my colleague Diabo Seto joins you as well right after the short break.